Eric Yakes.
Peter McCormack.
How the fuck are you, man?
I'm a little sad.
What?
I'm a little sad. This is going to be the last time we do this.
Yeah, I mean, we'll still have other cool people on the show.
Yeah. No, I just have to have a big enough name to be outside of Bitcoin.
You have to be able to talk to us about stuff other than Bitcoin.
Like what?
Whatever you want, man.
Like politics?
Zin?
I feel like it's going to get very political.
No.
Really?
No, I don't think so. I think it's going to get very cultural.
I think cultural, yeah. It should be broad. There'll definitely be politics covered, but like it's not going to be a politics podcast.
Yeah.
It's going to be Bitcoin, football, and weirdos.
Yeah, Bitcoin, football, weirdos. Yeah. You need to have Alan and I on. We've had a little bit of debate about football fundamentally is whether or not it's a good sport.
What?
Yeah.
We do this now, motherfucker. You question whether football's a good sport?
I can bring it up. I don't know if it's the best use of time, but I can definitely go down this rabbit hole.
Bring it up.
Let's get
All
there.
right. So the object of a game is to determine who can control the object. And statistically speaking, that's better when you have a higher amount of observations that occur. So soccer is a sport with arguably the lowest amount of observations of which team can control the object better. And it's much more subject to randomness, in which case it doesn't really get to a conclusion of who the better team was, which is why you have so many games that end in a tie.
Eric's new to football and he's here to fix this.
Okay. Firstly, not everything is strategic warfare. Okay. I know every American sport, they treat it like strategic warfare. The object of the game is to get the ball into the back of the net. That's it.
That's right.
And if you get the ball in the back of the net more times than the other team, you win.
Right.
Okay? So that's what it is.
With a high degree of randomness.
But the thing that I think
Low degree of randomness.
I think the
Relative
thing
to
that
other sports,
Americans
I'd
never
agree.
get about football is that a 0-0 draw can be an amazing game.
Yeah.
Yeah. So this was Alan's response, which was a good response. The only good response I've really ever gotten to this. And he was like, well, if it's entertainment, then it's more like a drama. And
No.
having that aspect in it makes it more like a drama. And I was
Okay.
like, yeah, it's more entertaining. You never know what's going to happen.
Eric, listen, shut the fuck up. The object of the game is to get the ball in the back of the net more times than the other team. Okay?
Yeah.
There is an element of randomness which makes it exciting, which means a crappy team could win. Okay?
Yeah.
But more often than not, the best team will win. Man City have won the league, 5 of the last 6 or something?
Yeah.
Because they're the best team, right?
Yeah.
But you occasionally get this random thing like Leicester City come and win the league. Or you get a little team in the FA Cup that
Right.
goes on a run, okay? But that's the object of the game. And the small amount of randomness that makes it exciting is a bit like poker.
Okay.
Because you could be the best player. The small amount of randomness means you might lose. You might lose on the river on a fair all-in.
Yeah.
Okay?
Like a drama.
I tell you where US sports suck.
Okay. Yeah. Let's do
This is the thing it's like the constant additional extra bits right at the end to make sure you might come back and win.
Oh, that's a good point. I completely agree with that.
Yeah.
Wait, what do you mean by that?
Like, so you can kind of you can game the end of a game to like for example, you can get the 2 points on a conversion of a touchdown by like running a play rather than converting over the post,
Right.
and stuff like that. But the thing that defines our football as infinitely better than your football is at the end of your game, if you've got enough points, you can do the last 3 plays, run out the clock, and like go to your knee. That's the suckiest thing I've ever seen in sport. I hate that.
Yeah. I do agree with that.
Yeah, it's like
Yeah.
there's a minute and a half on the clock. Play the game.
Yeah.
So, our football is infinitely better than your football, which is why the World Cup the whole world watches, and you and a few Canadians play American football.
What's the viewership of like
I think the World
World
Cup
Cup.
final is the most viewed sporting event in the world.
Yeah.
relative to like America? Do you have an idea of what it?
I'll tell you.
Yeah, I'm curious.
The other thing is, I think the other thing that defines football as like super interesting, like you said, a 0-0 draw, but you can have a game that's 0-0 to like the 85th minute and someone from 30 yards
Yeah.
scores in the top corner and the feeling's incredible.
Here you go.
We don't really get 0-0 American football. Has there ever been a 0-0 American football game?
Sure.
I think that, yeah, I think there's technically been one, actually. I think I heard that statistic.
So FIFA's claimed that 1.5 billion people watch the World Cup final live. Mm-hmm. I don't know what the Super Bowl is, but it can't be that much.
No. Super Bowl's like 300 million, I'd guess, something like that.
Yeah.
Yeah. All right. Yeah, that's pretty cool.
And it's exciting. It's passionate, and
Yeah, it's all right.
yeah, fucking come on my podcast and challenge my sport. And don't be sad. Times move on.
No, it's gonna be cool. I'm excited.
New world, brother.
Yeah.
How have you been anyway? How is Epoch going?
It's awesome, man. I've been busy. I've been traveling all over.
Tell the people about Epoch.
Yeah. So I'm starting a Bitcoin venture capital fund, and that's because I think it's solving the biggest problem for Bitcoin. The infrastructure and technologies around Bitcoin are, I think, what's the most necessary next step to making Bitcoin a global monetary system. And that's something that isn't a certainty yet. Bitcoin has this, like, I think, spectrum of outcome between being digital gold at one end of the spectrum, just like productized by Wall Street with the same freedom enabling capability of a bumper sticker. And then at the other end of the spectrum, you have a globally neutral monetary system, and all of the big problems that we talk about being solved by Bitcoin are going to emerge from that. We need capital to invest in the infrastructure around it to all these varying degrees. And then how you go about doing that, I think, needs to be a very intricate process. Very different today than what I think it'll be in 5 years to what it might be in 10 years. And yeah, that's why I started to do it. When I got involved in all this, when I went on the podcast, however many years ago, I wasn't sure exactly what problem to solve. I was just talking about the book, speaking at different things.
Malibu. That was in Malibu, right?
The first one, yeah.
Yeah.
It was a good one too.
Yeah.
That was a real hit.
Your mum was excited about that one too.
Oh, mom loved that one. Yeah. Mom watches all of them. You got to meet mom at some point. You guys need to get out to Denver.
You should bring her out to here.
I know. She came to El Salvador.
Did she? Mm-hmm. She like it?
Yeah, she thought it was really cool. She got to hop around the conferences, meet all the Bitcoin people. It was a little weird, but yeah.
You're quite the prolific writer as well these days.
That's what we're doing. And that's so I think that can be a really key differentiator with our fund, is to bring out research that is, kind of from the world that I came from in private equity, taking a very technical approach, taking a very measured approach, trying to remove the idealism out of it. And, but still creating narratives that can spread in a wider manner. Like, that's when I wrote this founding document for this piece. Like, that's kind of the goal. I wanted to define our investment philosophy, how we're thinking about the world. A lot of that's been built over the past few years. Like, if you watch that first podcast I did when we talk about Bitcoin maximalism and what I think, a lot of these topics, I was like, dude, I don't care. I don't know how to define Bitcoin maximalism. And I think I was like lying to myself a bit. Like, over the years, I do think about that question a lot, and I do come back to it, and I think it's relevant.
You got an answer?
Yeah, so that's what I define in the piece. It's Bitcoin marginalism is how I try to define what we're thinking about. I feel like there are these extremes within the world that have been defined between Bitcoin maximalism all the way at the other end to like crypto agnosticism. And I've always been kind of in the middle. I've always been like, okay, there's all these fundamental tenets about Bitcoin maximalism that I understand. I do see the case on the crypto side of things of what they're trying to build. I think most of it's either very premature or there's a ton of crap out there and scams and all of that. But nonetheless, I think the goals are valid in certain respects. And I wanted to define that with this paper around Bitcoin marginalism.
Okay. Roll.
All right. Marginalism. That's where we start. It's like the Putin meme where he's like, starting back in like 400 years ago, which is basically what it is.
By the way, that was a masterstroke of him to own Tucker.
Yeah.
That was the way I viewed that is I'm in charge here. I'm going to give you a history lesson.
Yeah.
And you're going to understand that I'm in charge of this interview.
Right. Yeah. He just dominated that thing out the gate.
So now you're going to do the same with marginalism.
Right. Yeah, exactly. So shut up. I'm going to talk about marginalism.
In 1282.
Yeah. So kind of around then is when mercantilism emerged. But like economics started to proliferate with like the original like economic theory was like classicism. I feel like people in the industry that talk about like Austrian economics or all these different groups that are more defined by a geography, not by the actual ideas that these guys were talking about. And if you were to crack open like an economic history textbook, they're probably going to frame it a bit more or less around geography and a bit more about the actual ideas. And like, that's how some of these major periods were defined. So like classicism was like very famous names like Adam Smith, David Ricardo, Thomas Malthus, John Stuart Mill, Jeremy Bentham, like very famous like philosophers and economists. And what was really interesting about that period is that they all had, they all kind of subscribed back then to this idea of the labor theory of value, which gets talked about a decent amount in Bitcoin. And it's like this antiquated view that people associate with like agricultural societies as we merged into the industrial age. And the labor theory, it's interesting because they all had a little bit of a different view on it. And some of them even admitted like, this isn't a full description of value, but we're not really sure what is. Classicism evolved into marginalism, and there's like this early group of the marginalists where it was a response to that. And they're like, okay, if the labor theory of value is this idea that the costs of production are where value is derived, why are pearls so expensive? Because it's very hard to go find them and dive for them. That was kind of how they thought about it. If that's the only view, we're going to swing to the other end of the spectrum and we're going to say, no, value is subjective. And we hear about that a lot. I feel like particularly in crypto circles, you hear that a lot. And that was when the marginalists developed the subjectivity of value theory. And that's the idea that all value is subjective across different people. There's different demand for different things for different reasons. It's hard to define any sort of like coherent structure around that. Value all is downstream from that. It was only later on in the marginalist camp that this guy, Alfred Marshall, came along. And it's funny, he's actually not as well known in broader circles. If you get into microeconomics, he's very, very well known. He built microeconomics. But he put this together and he said, well, it actually is, it's supply and demand. And if we look at the supply side constraints, the cost of production are a huge factor in how much supply can actually get into the market. And if we look at the downstream demand, that's also very impactful. And he's the one who created the supply and demand curve. And like all of microeconomics have stemmed from that. Another name for the supply and demand curve is actually the Marshallian cross. So like that is something that, this was my favorite class in college. I remember when I read about this and had this perspective. And I've always kind of taken this view that Bitcoin maximalism and the response of like this broader crypto group is very parallel. Bitcoin maximalists have a very heavy emphasis on supply side economics. That's how we define the value proposition of Bitcoin in many ways. It doesn't mean it's purely limited to that, but it is something that is very, very heavily emphasized. And then at the other end of the spectrum with like crypto agnostic type people, demand side considerations are very heavily emphasized, so much so that many go to the extent to where the supply side economics are irrelevant. And I see that is a very natural process of theories of value, similar to how value was defined in this period of classicism going into marginalism.
So do you mean there, like Bitcoiners care about fixed supply money, whereas like shitcoiners care about throughput?
Right. Yeah. Shitcoiners care about programmability and, cost of transactions, like how many blockchains got deployed because we're going to lower the amount of fees on the blockchain. It's going to be quicker. It's going to do more things. It's going to be cheaper. It's going to do more things. That's all that matters. And Bitcoin's like, no, having a finite immutable monetary supply is the most important thing here. If we lose that, if we lose an actual decentralized money, then what's the purpose of doing any of this in the first place? Mm-hmm. Like we can use software to do a lot of things with money, but if we don't have good money, then why are we here? And that's valid. And I think that, so Bitcoin marginalism is a view that we take the complete marginalist perspective of, well, the supply side economics matter very significantly. The demand side economics matter also very significantly. And the last big piece is the idea of these concepts all being relevant on the margin. So to explain that, so Adam Smith defined this paradox. He said it was the water diamond paradox, and they couldn't define it with the labor theory of value. They were like, why is it that water is so much more useful than diamonds, but diamonds, the price of a diamond is so much more expensive? And they couldn't figure out exactly what that was. And the marginalists kind of like solved this idea. I think it was Karl Menger specifically who like directly tried to solve it, who was an Austrian. There was a lot of Austrians that were marginalist. And he's like, no, it's, if you look at it on the margin, where if all the water in the world were removed tomorrow from the current supply, diamonds would be worthless and water would be the most valuable thing that exists. So the amount of supply that exists within the market that's readily achievable creates this diminishing marginal returns or increasing marginal returns, depending on which way it goes. So that marginal analysis of given the amount of supply or demand that exists, it changes what the incremental price will be given some sort of shift in that. And I think that's also very relevant to how we look at Bitcoin and its growth today. What's the marginal consideration of value when we're building technologies around Bitcoin? What matters today versus tomorrow? There's a lot of people thinking, 50 years into the future with what we might need in Bitcoin, and they're building for those things when the marginal value today may not be as relevant. Whereas if you consider that today, Bitcoin's largely just trying to capture the market as store of value, then technologies associated with that provide much more marginal value to the growth of the network.
So you said value is subjective.
Yeah.
Isn't value just a complex set of inputs that lead to the value? So, for example, you say the labor theory of value.
Mm-hmm.
Imagine I live on an island. There's 10 of us there, and we want pearls. I'm going to have to go and find those pearls. It's going to cost me to go and find those pearls. That could lead to a labor theory of value because I'm going to attribute my cost inputs to produce it what it's worth doing. But when you get into a market when there are many providers of pearls, that changes the value. And isn't it to some things where scarcity will matter and other times? So there's lots of different inputs, and it can depend what market you're in.
Completely.
Yeah.
Yeah. And I think that's the point, right?
Yeah.
Like that's the point of marginalism, is that there are all of these. So like with your example is a better way of describing it. If you were trying to go find some sort of seashell and the cost of actually finding it was so prohibitive that whatever value you'd get for it in the market wouldn't make sense for you to do, then that market just ends up not existing, right? And like that's the idea, is that cost is like this constraint. Nobody's going to be producing things where they're not generating enough revenue to cover the cost, and that's partially where the value is associated. And from a monetary perspective, that's incredibly important because the scarcity and cost of production of it is what actually creates a fundamental monetary property within it. And then there's also all these other inputs of the subjectivity side of it. So there's the labor theory to value. It's not wrong. It's just incomplete. And then there's the subjectivity of value, which is, well, how much does that seashell actually matter to people, and will that exceed the actual cost of production on it within a market? And that's subject to everything, depending on where you are, what your tastes and preferences are, and all these other things.
Yeah, and also say in the market of Bitcoin, we have a market price as such, depending on can fluctuate slightly depending on where you buy it from, but generally speaking, the price is pretty similar wherever you buy it from. You get maybe significant differences in certain countries where there's certain difficulties in buying, liquidity affects things, but generally speaking, we have a market price. But what's driving that market price is a market of buyers and sellers. But the market of buyers and sellers might be completely different. You've got FOMO buyers versus people who really understand Bitcoin, and they're buying out of a deeper understanding of the need for the scarce asset long term. So the inputs from the individuals can be completely different as well.
Yeah, absolutely. And that's so conceptually, the idea of a price is that it's an aggregation of all those tastes and preferences at any point in time. And then so to your example of the geographic distinctions, there's friction between moving value between those different markets. Depending on how high it is would be the difference in market price. But arbitrage actors in mature competitive markets act to eliminate those pricing differences. But if it no matter what, if moving Bitcoin, for whatever reason, from exchange in the US to exchange in Africa requires some sort of 10% friction, some sort of cost to actually make that happen, then you would assume there's always going to be at least a 5% premium that's going to exist. Yeah.
Okay. So attribute that back to Bitcoin. Redefine Bitcoin marginalism for me. Yeah.
So Bitcoin marginalism is, it's the belief that Bitcoin is this ascendant technology as a global monetary standard, and that having a emphasizing both supply and demand within the idea that supply is a constraint upon which monetary value emerges, and those demand functions that it also needs to achieve from monetary functions are also relevant, emphasizing that with considerations on the margin. Like that's the viewpoint that at any given point in time, we can apply this type of framework of thinking, and we're not going to adhere to an ideology of, as long as it remains scarce, that's all that matters. Just like, no, there's all these different functions that Bitcoin needs to be ingrained within a financial system to serve. Not a lot of that's been built yet. Bitcoin can't function as a global monetary system today. There's a lot of infrastructure that needs to get built around it before that can happen. That's going to be more and more relevant as Bitcoin grows. Today, I think it's still, and this is like the next part of the piece, there's dependencies in its adoption that have to exist before other use cases for Bitcoin are even meaningful. So like today, it's still just emerging as a store of value. And I think we're very, very early on that S curve in adoption. Until it can be really until that market of like store of value use case matures, I don't think medium of exchange or unit of account is going to be as relevant. Doesn't mean they don't exist today. It doesn't mean there's pockets of adoption here and there. But I think the tail of that adoption in the S-curve is significantly longer because we need to hit some degree of maturity in store of value use case. And then it's going to be like drastically easier for medium of exchange and unit of account adoption to start emerging. Once the majority of the world owns Bitcoin as a store of value, then the fundamental monetary property of acceptability is going to be very easy to achieve. And then all of a sudden, medium of exchange is just going to start happening overnight. That's kind of how it happens in private markets.
So what does this mean to the normal pleb? This might be something that you can sit down with Lavish or Preston and discuss. But to an average pleb, what does Bitcoin marginalism mean to them?
I think what it means is that Bitcoin is something where you want to have... if you want what's best for Bitcoin, if you want Bitcoin to become a global monetary standard, then you need to be thinking and helping to grow that in whatever way you can, I think, to the average pleb. And that doesn't just mean like building technologies around it. I think that comes from an educational standpoint. And, a great example is like the reason I wrote my book is because I wanted to write something that I thought was a lot more measured that I could sell to people from outside of Bitcoin. And I could say like, here's the measured take. I'm not putting any of my ideologies, despite what I believe about it. I'm just trying to have the most pragmatic, measured approach toward this. And I think like the average pleb, it's like if you're educating people on Bitcoin, then getting as smart as you can so that you aren't as much of an ideologue and you're somebody who actually just understands all the arguments at a fundamental level. That's one of the best things that I think you can do from a marginalist standpoint. The way I define that within marginalism is that like margin means border. It means being on the edge. And I think that there's a lot of people in the industry who are like, okay, I get this, the idea of like, TikTok next block, like it's just going to keep working. Nothing needs to happen. I think that the average person needs to realize that that's not really the case. Right now, we are the market. We are the people all creating these ideas. We are the people defining them. We need to be all operating on the edge. We all need to be participating. If you're opting out of conversations and you're just like, I don't know what that means, like, not really my cup of tea, I don't want to do it. It's just like, no, get in the game, man. Like, get an opinion, and you're going to be wrong. I'm wrong about things all the time, but get in the game, be on the edge, be on the border, be in the market, because we are on the market, and what we do and what we say really matters. And I think that like that's probably one of the most important messages to the broader audience that I think is important. Like when crypto criticizes, Bitcoin maxis are stupid and blah, blah, blah. And it's just like, there's smart ones and there's dumb ones. I don't know how to quantify what proportion of the market is smart and dumb. But nonetheless, there's a point that there's a lot of people who stopped educating themselves on things because they realized all these old tropes that we say about Bitcoin. And while they're true, there's a lot more happening and there's a lot more to be learning about.
I'm still lost as to what that means as an action. Like, and what? So I should, like, at a personal level, I should have a desire that Bitcoin has more utility and I use it more myself. I should be more active in building towards or using Bitcoin in this eventual global financial system. So I should be a more active participant. Yeah.
I think you can be an active participant. I mean, you are an active participant, right?
I know, but imagine I wasn't.
Yeah, exactly. So like, if you are trying to understand, so like, let's break it down by maybe what problems Bitcoin really has today. And there's like the whole scalability debate. You know, how many people do you think are very technically literate on the scalability debate?
Not me.
Yeah, like
Not many.
most people really aren't. And I wouldn't even qualify myself as highly literate, but I spend a good amount of time on that because I think that that's like incredibly important. And I think the answers may be very different than how we're actually thinking about things today. And a lot of my writing is based around that. I want to be describing alternatives to just here's pure trustless technical approaches that make sense. That's why I talk about eCash as like alternatives to that. But I think that learning about and having an opinion on those things is actually really important. If you go talk to, there's plenty of conversations out there where you can talk to people and like you might get like, okay, if you ever find yourself getting very angry in debates with people, it's probably because you don't know enough. Like if you're at a Christmas table, like, you know, it's probably true because you're getting upset because they're pushing you into something you can't explain. And there's a lot of things where you know, if I'm having conversations about like, well, how can I pay for this in Bitcoin? Oh, well, you have to run your own Lightning node to do that completely trustlessly and like blah, blah, blah. And they're like, okay, well, I don't want to do that. And it's just like, no, well, you could do that. You just don't need to spend the time. Having these expectations of people to where everybody is going to put in all this time and energy to, you know, use Bitcoin the same way that you have is totally an unrealistic expectation. There's a difference between thinking about things at an individual level versus at a systemic level. And when you think about it at a systemic level, you assume everybody's a selfish actor and nobody cares about what you care about. And when you think about it at that level, you need to be able to explain things to people from that perspective. And the scalability debate, I think, can vary significantly when you think about it from that direction.
Okay, so if someone was listening to this and they disagree with you, what would they be arguing back at you? What would be the counter argument?
So I don't, it's a good question. I think like if there was, there'd be different disagreements. So I think Bitcoin maximalists, like the one extreme end, and I'm not qualifying everybody in the same bucket, but I think one extreme end of it is they would say that, you know, any sort of soft fork or, you know, any sort of technical adjustment can be potentially a threat to Bitcoin. All we need is to maintain it as scarce. Or some people might say, no, Bitcoin's just going to be digital gold. And, you know, we don't want to mess with that. And that's what matters. To which case my disagreement would just be, that's not going to change the world.
This is like what we talk about all the time with whether if we just get 21 million, and I know why you say that, then I feel like Bitcoin has kind of failed. If we sacrifice a lot of other things on the way to that, I think Bitcoin has failed in its mission.
Yeah.
I mean,
obviously I disagree. Though.
Yeah. But I think that's where Eric's making the point.
So we've had this ongoing debate that my view is that we will be allowed 21 million. And then once we have 21 million, we will get privacy, but we will not get both at the same time. And that's not to say you cannot be private with Bitcoin and there won't be tools. And there's a solid argument against what I'm saying is there's tools coming out like secret silent payments and things. There's things that are happening that are making Bitcoin privacy better. But generally speaking, I accept, whether I want it or not, take that argument off the table. I accept the government, my government, your government, it's not they don't want us. They're not allowing us to have privacy. Like,
right.
They're part of the social contract right now is we know everything about you and you can't do shit about it. So stop fucking complaining. Okay, that's what it is. We look at your emails, we listen to your phone calls, we look at your bank payments, and that's just how it is.
Yeah.
And so with Bitcoin, I just don't believe it's why Monero's been so kind of like marginalized. The exchanges have got rid of it. It's because that allows people just to send value anonymously. And I just don't believe the government is ready for that world. Even though privacy is a fundamental human right and, you know, and it's a pillar of democracy, blah, 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 we're just not being allowed to have that. But I think we are being allowed to have 21 million in that we have Bitcoin. And ultimately, if we have 21 million in its full form, and what I mean by in its full form is like, government has adopted it. By government adopting it, they now have to run a budget. They can't print Bitcoin. Ultimately, it'll redefine government, and in redefining government, we eventually get privacy. That's my argument. My argument is on the way. We lose privacy to get it back. Danny, your argument is that
I don't think we should give up our fundamental values just to have Mr. Larry Fink on board.
I agree. I don't think we should. I just don't think we have a choice. Is that the fair difference?
I think that's your point. Yeah.
Yeah.
I don't know if I agree with that though.
Yeah.
I think that technology gives us the choice. That's what Bitcoin did, right?
So hold on. So a ossification maximalist couldn't be a Bitcoin marginalist.
Well, okay, define ossification maximalist.
I don't know if they're maximalists, but like people who are proponents of ossification, they just don't want any more upgrades to Bitcoin. Bitcoin is good. It does everything it needs to do now. It holds value, and you can send it around, and everything else you need to build on the higher layers.
Yeah, I think that an entire system can emerge around this without a soft fork. I think that's totally possible. I write into the theory around free banking at a technological level and whether or not that could be the system that works. But yeah, I think you can be an ossification maximalist and still maintain a marginalist perspective, because a marginalist perspective is just that there is an emphasis on both supply side and demand side dynamics at a marginal analysis level.
By the way, have you seen Taproot Assets has launched? I think it's launched.
Has it launched?
I thought I read something about it.
I've not actually seen that.
I think it was
I've
yesterday.
not read much into that at all.
Super interesting about Taproot Assets is if you have stable coins on Taproot Assets, you essentially can eliminate Visa MasterCard fees.
Oh, interesting.
Because it's 3% whatever you pay as a retailer to accept dollars. And if you now accept stablecoin dollars on the Lightning Network, you're paying a micro payment?
Yeah.
This is terminal for Visa and MasterCard.
Yeah. Yeah, exactly. And one of the most fundamental aspects of all this, and that's how we look at it, is, in crypto, there's this idea of decentralize everything. And I don't think it's necessarily we need to decentralize everything, but by using software and using cryptography and applying that to digitally native money, we're going to make things so much more efficient, and we can eliminate all the inefficiencies, or at least the market power that providers like that have.
Okay. I think Bitcoin marginalism is a harder thing to define and explain. Bitcoin maximalism is a really easy thing to explain and to get across to people.
No, I just think that it's okay. So here's probably a better way of defining it. If we were to think about, where is value derived? The classicists would say that it's through the cost of production. The early marginalists would say that it's through the demand of subjectivity. And then the later marginalists would say that it's through the intersection of both of those things. It's both supply and demand. All I'm really defining here is really a centrist view. That's pretty much what it is. It's a centrist view on the ecosystem and saying that,
Bitcoin centrist.
Yeah, kind of like that, but applying the economic thought of values derived from marginal analysis fundamentally, and both supply and demand considerations are relevant. The fundamental monetary value must always remain that we have a fixed monetary immutable supply. But nonetheless, all these demand considerations are highly relevant.
Yeah, I think the difference between that and maximalism, Bitcoin maximalism defines how I'm meant to think about what I represent and my actions. Bitcoin marginalism is more of a framework for measurement. It's a little bit harder. It doesn't really define who I am and what I should do.
Yeah. I mean, definitely not. Yeah. It doesn't try to define your subjectivity for you.
Yeah.
Yeah. And we apply it to Bitcoin because that's where it's it's being applied to Bitcoin because Bitcoin is something that, although it's all subjective, you could say that not having immutable monetary economics doesn't matter. But I think it really does. I think that's really all that matters. And that's why when you apply it to Bitcoin, I think it's a really compelling way of looking at the world, and you can apply that type of a framework and not tell people how to live their lives.
Okay. So what do you think this means for Bitcoin, if you're correct?
I don't think it's some sort of groundbreaking thing for Bitcoin or anything. I just think it's a way of defining a framework of thinking that, there's probably a lot of people who I've talked to that have a similar way of thinking. I think what it means for us is when we're writing this piece as a founding document for the firm, it's hard. It's our investment philosophy because there's all these controversial questions like, what do you think of tokens? Or why not just invest in Bitcoin, then invest in infrastructure around it? And all these questions where I think if we adhere to a framework that maintains this, that's going to be relevant to us going forward. And it's going to be a North Star.
Okay, I see. So the marginalism framework is a framework that enables you to identify where you think you should be investing because those are the most important technologies for the growth of Bitcoin.
Right. And this is just how, but like it's a framework of value, right? So it's transcendent. Like value is pretty much a consideration in everything we do. So it's like you can take this and apply it in your life in any sort of way. But that's how it applies to what we're trying to accomplish.
Okay. Talk to me about adoption then.
So I think like the marginalist perspective on adoption is that like the way that we're thinking about things is there's going to be three, or how we view things is that we expect there to be like three primary adoption cycles. Everybody's like shows like an S-curve adoption chart and they're like, okay, we're like this early, we're down here, we're before the early adopter phase or whatever. And I think that there's going to be like three primary major cycles and we're just in the first, which is the store of value phase. Because the other phases of adoption are dependent upon us achieving this large market size as a store of value. And we view from like a capital allocation perspective, technologies and infrastructure that enables Bitcoin as a store of value today as being the most relevant. And they're going to bring it to the next step so that it can get into the medium exchange and unit of account type phase. And that's just like basic on-ramps, financial services, all these things that might be considered boring and not like deep tech, like ZK rollups, things like that, but just like very boring technologies that are increasing access to Bitcoin in some sort of way and using it as a store of value.
Yeah, and there has been a significant investment in store of value technologies. I mean, I met a really interesting company today whereby they have combined private client services with a multi-sig wallet, for example.
Yeah, exactly.
Yeah. And so, we've seen a lot of that. We've seen this multi-institutional custody solutions that are coming on board. Ledger have got one now. Who's what's
OnRamp?
OnRamp, yeah. Tanguma's project. So we've seen a significant amount of investment in that. And what's really interesting with that one is there's all these layers of storage, Bitcoin custody from software wallets to single sig to multi-sig to custodial to now multi-institutional custodial. So they're almost like they're almost distributing the risk for the growth in the asset in that say you had like a couple of $1 million of Bitcoin, you might be okay with a multi-sig, but if you got to like 10 million, like what do I really want to manage this myself? You might want to put part of it in a managed solution, but then do you really want to risk on that? So you want it in a multi-institutional. So we're starting to see that kind of like expand to all the different scenarios that people may want. But I guess, and a lot of the medium exchange companies have failed because the market isn't there for it.
Right.
It just isn't there. That's not, like today, we're using OpenNode today. We're going to sell a bunch of stuff using OpenNode at the conference for people who buy stuff with Bitcoin. And we have the same in the football club. That's only on the days we have a meetup, and it's only like 5% of our turnover.
Yep.
So like if you're medium exchange, you've got difficulty because the market's not there, but the market's coming.
Yep.
So are you thinking about investing in the current adoption phase, or are you starting to like look for the opportunities in the next one? Because do you really even know when the next one starts?
Yeah. I think we're gonna have a pretty good idea when we're getting close to it, because it's gonna be wild when we're getting close to it. But like it's so like you'll see it in some of my writing, right? Like I think very prospectively about things. We're definitely thinking about the next phase. But from like, behind the scenes investment approach, we're thinking about the current phase. What's investable today? What can be monetized within 5 to 7 year time horizon? And all of that is really focused on store value type functions. I think if Bitcoin gets to $500,000 to $1 million, that conversation is going to start to change pretty quick. And beyond that, it's really hard to say prospectively just how big some of it can be. But to your point today, there's first just like the on-ramps and the financial services that exist. And to your point about shared custody, like there's a lot of basic forms that we need, but I don't think that a lot of the demand functions or the demand sources for like shared custodial operations exist yet. So like we're looking at these new models of doing that like for Bitcoin. But if we get into a world where we actually have a lot of like digitized assets that we can very easily be putting into escrow, and these are like legitimate assets, and we can talk about this later, but like, you know, the idea of like what tokens will eventually become. But like a shared custodial model that is low cost is really important. If we like think about that today, how to actually have shared custody, like assuming Bitcoin and everything never existed, we're taking all these basic financial functions and we're like lowering the marginal cost of participating in these things. And like, that's what's really cool. Custody is getting cheaper. Shared custodial models will get cheaper. We need to have, there's all these dependencies for shared custodial to expand in markets outside of just Bitcoin. But once those hit, I could see like very large markets emerging for shared custody, because that's like pretty compelling in a lot of scenarios. But we're so early in a lot of this that those dependencies just are, you know, haven't occurred yet.
Yeah, it's quite interesting thing about those adoption phases as store of value, medium exchange, unit of account.
Yeah.
Because you can think of the technologies, but also at the same time, there's like a blurred line between each phase, because there's even unit of account businesses at the moment.
And I think they overlap as well. I don't think it's like one then the other. I think all those phases will overlap at some point.
Like Zaprite is a company I'm fascinated by at the moment, right?
Zaprite are killing it.
Yeah, they're killing it. Yeah. So every one of my businesses, I use QuickBooks as our invoicing tool, right? End of each month, I just generate a bunch of invoices, they go out. And if somebody wants to pay us in Bitcoin, which is like probably 20% of the like sponsors of the podcast, I just go and generate a QR code. QR code. I go and generate an address, from my wallet, put the address in the invoice and say payment with Bitcoin. Zaprite, I go in now and I connect my, whether it's a wallet or Unchained, whatever service I want to use, I go and connect that in Zaprite. Now I go and generate an invoice. I don't have to generate a card, right? It just pops up with them, pay with fiat, pay with Bitcoin. The end customer receiving the invoice can choose, and it just goes straight into my multi-sig. I don't have to do anything. And so it's like, hold on a second, you offer me exactly the same as QuickBooks in that I can generate an invoice, but you natively understand Bitcoin. So anyone who's receiving an invoice can choose which currency to pay in, and it just automatically goes to my wallet. So I don't have to think about it. And I get a lot. It's like, oh, fuck, you're charging $240 a year.
Yep.
And QuickBooks is charging me $38 a month. I mean, this is a no-brainer. One day I canceled every QuickBooks account I had and moved to Zaprite.
Yep.
And what I think is super interesting there is they've done that thing where they've understood Bitcoin, companies who deal in Bitcoin also deal in fiat, and they've just made both work.
Yep. There are so many companies where taking the approach of like, I view that as an on-ramp.
Yeah.
You know, that's an on-ramp into Bitcoin. Taking a current solution for people, applying it in a way that works natively with Bitcoin, and then allowing people to gradually, you know, get more and more exposure and usage of it over time. But if you can make your product needs to either, like, there's like two things. It's either you're building something that's completely novel that can only be done in Bitcoin. And then the question is whether or not that's relevant today. Or you're just building something that's competitive in the current market and has Bitcoin functionality. And that there's a lot of considerations that depend on whether or not that's a good investment. You know, how competitive is the market? What type of moats can they be building up? You know, what's the actual valuation on this company at what point? And that's another point too. Like some of these medium exchange focused type businesses, it doesn't even mean that they wouldn't be a good investment today, but it all comes down to valuation and timing.
Yeah. And I mean, it's still a challenge for you because, you know, even with your failure rate, you still got to try and outperform Bitcoin.
Yeah,
and I think I've viewed a lot of Bitcoin VC work as almost philanthropy, in that the safe bet is you just hold Bitcoin.
Yeah,
because if you're a Bitcoin VC, if Bitcoin fails, probably all your companies fail, pretty much. Okay, so you bet on Bitcoin working. Well, the safe bet is just to hold Bitcoin.
Right.
So. I mean, look, you don't have to outperform Bitcoin. I mean, some of the people would just be giving you dollars, and you may outperform with, with dollars. But it's still a big question hanging over Bitcoin VCs, right?
Oh, totally. So that's like probably the primary question to answer, right? I think the first thing is like when we're talking to investors, we never recommend investing in our fund before investing in Bitcoin. Like you should always own Bitcoin first. It's the best, you know, in all these different measures. When you talk about compound annual growth rate since inception. It's, got the highest Sharpe ratio of any asset category. Having self-custodial Bitcoin is the best form of insurance you can really have from a financial perspective today. Like, get that. From allocating to our fund, it's just like, why not just invest in Bitcoin? The first thing is, I wouldn't qualify it as necessarily philanthropic all the time. Like, there's an incentive to allocating towards the broader ecosystem because that has second order benefits to your position in Bitcoin over the long term. If there's enough people investing in Bitcoin infrastructure, that increases the market size potential of Bitcoin. And like that actually is important. Like if I was a billionaire sitting on a bag of Bitcoin, I would be pretty active as to how I'm developing infrastructure around it in the right way that can help make it global money. In the same way that, Sailor's marketing it very heavily. Like incentives are aligned to want to be supporting it in indirect ways. The question is more of just like how, but like, so that's the first thing. I think in terms of, from like, when we think about the adoption perspective, there's a big question of like, what's timing going to be like? I think when Bitcoin goes through some of these S-curve phases, we're going to get a large amount of growth, but we also have periods where Bitcoin is ossifying or flat for periods of time. Timing differences with a private capital investment versus how Bitcoin's performing in the near term, it can give you a different risk-adjusted allocation, as well as exposure to variables. Like Bitcoin can crash in price, but businesses that are using Bitcoin can actually still do very well. I mean, how does a podcast perform during bear markets? Like how do you guys get hit nearly as hard as like an 80% drawdown? Probably
no,
not.
but we do get a drawdown. We have our own drawdown, which is a bit weird. So the best way is you define the audience, right?
Yep.
So there's segments in the audience. There are psychos who just always want to listen to as much Bitcoin stuff as they can.
Yep.
Endlessly. And then you've got noobs, and noobs want to listen to everything to begin with, and then either they got wrecked and they just forget about it, or they've heard enough and they get a bit bored and move on. Mm-hmm. And then industry people who just pick out specific shows because they want to do it. So we will have a percentage of people listen to every show because they're psychos, percentage listen to every show because they're noobs, and then people listen to industry shows. But the fluctuation comes from how many noobs are coming in. Okay,
Yep.
The more noobs that are coming in, like a noob phase, we're in growth. Okay. Now, we're at the tail end of a bear market still. I still think we're like arguably, I mean, we're in the like purgatory between bear market really, because we're not in the bear market as such, but like all the noobs haven't come in yet.
Right.
So I can look at how many new subscribers we're getting each month, and we're getting new subscribers, but it's not enough to drive us into massive growth.
It's not bull market vibes.
No. And it's kind of bullshit because in the last year, we've made some of the best shows we've ever made.
Yeah.
The fucking numbers are average.
Yeah.
It's one of the reasons like I don't even want to make a Bitcoin show anymore, because I want the performance of what we do to be based on the quality of what we make.
Right.
And so, but yeah, so like at the moment we're on a drawdown. The worst case would be like 50%ish.
But the thing that really kills the audience is sideways. Like when it's up or down, we tend to do really well. But the price really hasn't moved in like 5 months, and you feel that.
Right. So that's a great point, right? Like, so you kind of have almost like this correlation with volatility.
Yeah,
basically.
Totally.
And then you're accumulating a listener base and retaining some over time. And like you have a business that is structured in a way that isn't following the path and correlated with Bitcoin price. It's affected by it, but it's actually very different in some respects. And that's true of a lot of businesses.
So we have a similarity in our business to many other businesses in that 50, I don't know how you attribute it, 50% of our success comes down to the price of Bitcoin.
Yeah.
And the other 50% is how good we are. Like if we're terrible, it doesn't matter what the price of Bitcoin does.
Yeah.
But if we're amazing, it still doesn't matter what the price of Bitcoin does. Like we need the price of Bitcoin. It's the accelerant for what we do. But, pick any Bitcoin business. You could have the best exchange. River, Strike. It doesn't matter all these like onramps. They could build the best UX, have the best branding. The Bitcoin price isn't doing what it needs to do, they're not going to have many new customers coming in. It's fucking Bitcoin's weird like that.
Totally. I just think like you can look at it from a lot of anecdotal frameworks. When you look at it fundamentally, you can get exposure to different aspects within the Bitcoin ecosystem for growth, right? So like a custodial service is just recurring fees. As long as like that exists in some percentage, you're getting recurring fees of AUM unless people are moving it away from your custodial service, regardless of like who owns it or what price it's trading at. There's different SaaS-based business models that exist. There's all these ways that you can get exposure that isn't subject necessarily to volatility. Largely, like if Bitcoin fails, then yeah, like they're most of the value propositions. Maybe Zaprite actually, and that's somewhat of a hedge, right? Like if you look at something like Zaprite, maybe they just compete against QuickBooks. If Bitcoin goes to zero tomorrow, could they still compete in the market? Probably. That's a bit of a hedge against an exposure to Bitcoin. There's a lot of different dynamics, and it's hard to just talk about purely anecdotally because there's a lot of different dynamics across businesses that you can be looking at. So like that's another way of looking at it is like one thing that's really attractive is the economics of like Bitcoin lending. Like that is a great business model, and like Max Kai's company, like Debify, that's something we're really excited about because they're just a platform and they have exposure to when the Bitcoin price is going up, the amount of volume of originations of loans that exist. There's like a huge void in the market for that right now. And they're doing it in a way that's like capturing a lot of the benefits of like DeFi from lending, but it's in this Goldilocks zone because it still has like the consumer UX of like a CeFi type solution. As Bitcoin grows, lending is going to get massively larger. There's perennial demand to not sell Bitcoin and to, get fiat dollars and spend those on top of it. There's some models like you could look at it almost like a leveraged play on Bitcoin, and even just using Bitcoin and putting it on the balance sheet or taking a leveraged position as a business, that can make a ton of sense. It's not to say that there's not going to be businesses that, don't outperform Bitcoin. I mean, particularly in venture, it's, you would expect around a third of the portfolio to go to zero, third of the portfolio to be middle of the road, and a third of the portfolio to be really successful. I think that if you tie that type of like standard allocation framework to Bitcoin, that third of the portfolio that can be really successful might actually end up being really, really successful. If Bitcoin's really, really successful.
If? When?
I'm speaking as an investor.
All right, man. Well, listen, when do you launch?
October. Yeah.
Right. Do you want to go to pleb party?
Oh, yeah. I'm down for the pleb. Oh, I need to go talk to rich people first, but.
All right, dude. Congratulations. All the best.